here. So it's time for everybody to change their game, remove their game, renew their game, whatever it is. But let's talk about the Las Vegas stats first. And then we're going to do some education. Okay, first of all, we have 109 homes yesterday that's sold. That's fantastic. That's our month to date. Since this is the second, we sold 109 homes yesterday. And we have 21 days of inventory. We went over the 20 mark. Oh, how exciting, because you all listed 177 homes yesterday. That is so, so exciting. And we put 130 under contract. And that 21 days of inventory is fantastic. We have, in June, we ended up selling it on the daily. That's 30. That's for every day. We averaged 148 sales. So unbelievable, just totally unbelievable. And just so you know, the California gas tax went up 50 cents. That might put even more Californians here. We know from Brian Buffini that, you know, the New York and the California taxes are going to drive more people here. So that's good news. We've got about 803 sold $1 million plus properties and 441 available, still outpacing last year like you wouldn't believe. We're up 30%. And that's 30% for all of last year in just the first 6 months. So unbelievable that things are popping like they are in that market. And I want to say something about that today. Let's see, where's my stat sheet? Here we go. Okay, let me see if I can put myself back down. Okay, here we are. This is from January the 1st till today. And you see that, first of all, we've got the iBuyers and the interlopers in number 1, 2, and 3 spots when it comes to number of transactions. So, I mean, just right there, simple math, that's probably 1,400, 1,500, 1,600 sales are going to them, not you. And that's a big part of our market. That's 1,600 sales. And that's list side, sold side. So that's 3,200 agents didn't get paid. These guys got paid, and we want to overcome that. That's my hope and dream that we can do that. I want to point out here that we've got Aaron Taylor. He did 136 transactions this so far this year, which is phenomenal. He is in 9th place. He's going to be on our show tomorrow and share. Aaron is so good. He always shares his secrets with us. So that's going to be great for tomorrow. But I also want to take kudos out here to Ivan Shear. He's number 10. He has sold $318 million worth of real estate in the first 6 months of 2021. Phenomenal. And if you do the math, and let's say, just for the sake of this example, this is just an example, everybody, that's an average of $1,590,000 in commissions a month at 3%. Just saying, whether it's 2.5% or 2%, it's still a lot of money. And I just want to show you his team. You know, you have to give credit when credit is due, and he has done a phenomenal job. And look at his team. How many does he have? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17 people on his team. And they do a phenomenal job. Just congratulations, everybody. You're in the top 10 for the first half of this year. And I mean, look at these stats. Has anybody outperformed you volume-wise? Well, these guys up here, let's see. No, not even the iBuyers and the interlopers. They didn't even outperform you. So congratulations. That is just phenomenal. All right, so let's get on with our show today. We've got lots and lots of things to talk about. First of all, the jobs. The job market announcement came out, and we have a strong 850,000 net new jobs in June that were added. Fantastic. And residential construction workers and general contractors rose by 15,200. Why? Because builders got permits, and that's fantastic too, because that gives us more inventory, more choices for the buyers. So there more homes will be completed in the upcoming months and more housing inventory will be added. Commercial real estate shaved 11,700 construction and contractor jobs in June, making a third straight month of decline. I mean, we kind of understand that, right? People have changed where they work. Businesses have gone out of business. And so there's a lot of empty retail space. Things like that have happened. So even with the job additions, the unemployment rate edged up a notch to 5.9% as more people began searching for a job. But to be officially counted as unemployed, one has to look for a job, right? There's a lot of people out there that haven't been looking for jobs. The job rate was 4.4% before the pandemic by comparison, and 14.8% during the lockdown. Interestingly, you know, the teen unemployment rate is lower than now compared to pre-pandemic. So salute to them. Let's hope that many are, so sorry. Let's hope that many are saving up and starting to invest. Yes, that's what we want them to do. And that's probably what they're going to do. Consistent large monthly job gains over the past year have not been enough to get us back to pre-pandemic normal. However, the economy still needs to add 6.8 million more jobs to get us to the pre-pandemic peak condition of the February, which would be the condition of February in 2020. It could be another 12 months before we reach that high mark. More construction jobs and training will be needed to build more homes for a federal government infrastructure spending boost, which, you know, they've been talking about. So I'm sure that the more jobs, like he's saying, they're going to be coming online. Construction for residential is up in the job market. So, and the biggest jump in jobs in this marketplace, of course, were in the hospitality industry, hotels, casinos, theme parks, things like that. So, of course, that's our business is hospitality. We're in the hospitality sector. So life is good here. You know, we're open. I'm anxious to see how many people are going to be here. I didn't get a chance to look at the review journal to see if they estimated, but I'm sure they did. I'll have to look at it, how many tourists they expect to come. So that's hot off the press this morning. Lawrence Yun, the chief economist for the National Association of Realtors, put this out. And if you didn't hear it on the news, you heard it here. So what else is going on here? We've got a weekly housing market monitor that the National Association of Realtors put out. And I don't show this every week. I like to do it maybe the last week or first week of the month, so we get a perspective. I like really to do it like today, you know, the first or second of the month, because it gives you really the perspective in the month on some of the stats. So let's go there real quick. I need to get up here. We need to go down here. All right. The weekly housing market says pending home sales bounced back 8.0% in May. So they can't go to June because they are still gathering that data. However, pending home sales pulled a surprise lift in May, rising 8% from the prior month and 13% from a year ago, the highest reading in May since 2005. So that is fantastic. And if you were here in this market in 2005, you know what a frenzy that was. And it was not creating a solid economic base of home ownership. That's why we had the foreclosures. And so the fact that it's highest since then, I think, is a great indicator of the strength of how housing fits into our economy. Well, it's 16 to 18% of our economy. So that's good for everybody. The increase in pending home sales in May could be due to the decline in the 30-year fixed rates in May was 2.96% after rising above 4% in March and April, as well as slight increase in inventory of homes. happen in May, he's saying. Contract signings rose in all regions in May compared to the prior months and a year ago. And you can see now, Jimmy, it's a shame Jimmy didn't join me today because Jimmy loves these charts. I don't like these types of charts. I think they're confusing for me. I mean, I know you can take your time and you can go here and follow those lines, but I like the written word, and that's just me. Everybody's different, but Jimmy would love this. Just saying. Okay, so now, new contract signings in the past 4 weeks are down 6% from 1 year ago. So pending home sales rose in May. That may be just a spike, but mortgage rates rose to over 3%. And surging home prices deeply eroded home affordability. So you had the increase in the mortgage rate, you had the increase in the pricing. So we took away some of the home buyers out there, their ability to buy a home because they can't afford it. Preliminary data on contract signings indicate that new contract signings fell in June by 6.3%. Meanwhile, more new listings came on the market. And I love that, with new listings in the past 4 weeks up 6.9% from 1 year ago. Yay. However, well, a lot of that's because, remember, a year ago, you have to think about it, right? That was pandemic. People were still in lockdown. People didn't want people in their homes. All those things went on. However, total active listings are still down 31% from 1 year ago. So we go over that every day, right? Total pending listings are normalizing from the surge. Total pending listings are normalizing from the surge in the second half of 2020, but they're up 13% year over year. Okay, I guess we know that. And here again is the crazy chart that I have a hard time reading. Weekly Housing Market Monitor says CoreLogic, Case-Shiller. I love Case-Shiller. They do I love the way they do their statistics. Home prices measured at a constant level of quality by using only repeat sales data rose 14.6%. Okay, so Case-Shiller said that the home price index shows home prices rose at the highest annual pace of 14.6%, and they rounded it up to 15. In April of 2021, Jimmy tried to get in, but he couldn't. So sorry, Jimmy. So sorry, don't know why you couldn't get in. We'll have to look at that. Anyway, I miss you. The fastest price gains were in Phoenix and San Diego and Boston, with home prices up over 20%. Now, from a selfish standpoint, I'm kind of glad that prices rose in Phoenix because people that move here, they usually look, I don't know, the buyers say, well, I'm looking at Arizona and I'm looking at Nevada. And so selfishly, I'm glad they rose 20% in Phoenix. San Diego, oh my God. I mean, how high can the prices go in California? Unbelievable. People love San Diego, though. It's got fantastic weather. The home prices are incredible, though. Boston is another nice place to live. But if you've ever been there, I mean, it is cold. It is cold with humidity. It's hot with humidity. Not my favorite place for climate, but it's very historical, and the restaurants are fantastic. But anyway, and now they have gambling too. So I think, a lot of that has to do with their prices going up because people are moving there. NAR reported last week that the median sales price of single-family homes rose 24.4% year over year in May. May of 2021. So while the median sales price of total existing homes rose 23%. Now that means single family, condos, and co-ops. So these are the highest readings since 1969 and 1999, respectively. NAR's median sales price captures the mix of homes for sale, with fewer homes for sale in the price range of $100,000 to $250,000. So it's down 2% in May of 2021. Unbelievable, right? This index is based on sales over a rolling 3-month period of single-family homes that have sold twice repeat sales to capture the true appreciated values of each sales unit. Gosh, they make their sentences so long sometimes. they just need to punch it, like do bullet points. Anyway, the April reading captures price changes over the period of February. And NAR tracked condominium sales only in 1999. So the median sales price of existing home series, they call it a home series. That's condos, townhomes, and single-family homes, starts in 1999. However, single-family homes comprise 80% of the total existing home sales. Okay, wonderful. Weekly mortgage purchase applications declined by almost 5%. After rising for 3 weeks, mortgage purchase applications fell 4.8% from the prior week and decreased 17% from 1 year ago, according to the Mortgage Bankers Association's weekly mortgage app survey. So conventional home purchases, loan applications, Fannie Mae, Freddie Mac, guaranteed loans fell 4.6% from the week prior, while government insured loans fell 5.5%. So government loan applications, FHA, VA, USDA, typically cater to first-time home borrowers, and that they have declined since 2020, an indicator that first-time home buyers having a tougher time obtaining a mortgage. Well, we realized that a couple slides ago, right? So refinancing also declined 8.2% from the previous week. And that doesn't surprise me either. When the prices go up, it's not always, financially a good decision to take on a new mortgage. So, and this is just the chart showing what I just said. And I'll post these in the group for you people that love these charts. I'm thinking of you, Jimmy. So weekly housing market, 30-year fixed mortgage rate rises to over 4%. Hang on, let me see that. Oh, come on. To over 3%, yeah. So the 30-year fixed mortgage rises to over 3%. Okay, so what does that mean, everybody? That means that the monthly mortgage payment is going up $276 from a year ago. So we were hovering, below 3% for 4 weeks. The 30-year fixed mortgage rate rose then to 3.02%, while the 10-year Treasury note fell to 1.5%. Chief economist Lawrence Yun expects the 30-year fixed mortgage rate to move towards 3.5% by the end of 2021, and the inflation rate to average about 2.7% in 2021. Even with higher inflation, the Federal Open Market Committee has kept the federal funds at a rate of 0 to 25 basis points as it sees the current inflation rate to be transitory, mainly arising from a temporary rebound in consumer spending. Well, that's a mouthful, right? But basically what they're saying is that they are not going, they think that the inflation is temporary based on, everybody getting money, spending more money, prices going up because of the things from the pandemic. I mean, there was a fella I heard on the radio talk about just the oil for him to, make French fries has almost doubled. So of course he has to increase his prices. But as those things come back to normalizing, according to the economists, then inflation will be temporary. So that's a good thing. We'll see, though. I have a hard time with that a little bit, everybody, because I'm trying to think. We pumped all that money into, trillions of dollars into the economy. And I know that affects the inflation. So we'll see. We shall see. But at least they're keeping the interest rates reasonable. Let's see. I think that's it for that. Okay. Now, I said I was going to have a tip today, so I got a few minutes. Did I get? So if you don't know, we have a new normal, right? We have a new normal. I know you know that. I was listening to a fellow RE/MAX team leader, and he has a question, and for me, and so did I get it? Hold on. Did I get it? Okay. I don't want that anymore. I don't want that anymore. I'm done with that. Darn. Let me go get it for you because I want you to see this. And you all probably know this, but you know, I'm not out there in the market like you are. And so let me see if I can't find it, everybody. It's a tip he's giving. And like I said, this may be, oh, I know what I always do is it needs to be all files. Okay, I'm going to find it now. Just bear with me. Okay, here it is. All right, so are you looking at temporary off the market homes when you can't find a home for your buyer? Now, maybe you are. Maybe everybody's doing this, but I didn't think about it. So I just want to share that in case there's more people like me out there. I didn't know that. So what he's saying, his name is Tom Toole. He's from Pennsylvania. And what he said is what he does is, you know, if he can't find his buyer a home, he goes to the temporarily off the market in the MLS and he calls that agent and says, you know, did they take it off the market because of the pandemic? Did they take it off the market because they thought the price would adjust up or down? Or did they, you know, did somebody get sick? Did somebody have a baby? Or would they consider selling their home now? So there's 153 of these in our MLS right now that are temporarily off the market. So let's see, let me put the new normal down here. I think, yeah, they started about 400,000 and I saw one as, they go down as low as 120,000. So these, I just pulled this off the MLS right before the show. So, you know, maybe you all know that. You probably do. Anyway, I thought that was really an interesting tip. And one of the things that he does that you can do with Agent Formula website system is you can send people a video. And he sends 4 videos a week. Yes. He does one motivational video on Mondays. Then on Tuesdays, he does things that are going on in his community. And then he does the market stats, I think on Thursday. And then on Friday, what does he do? Oh my gosh. Friday, he has an interview. Okay, so kind of like I have my interviews on Saturday, he has his interviews on Friday. But they're short. I looked on his Facebook page. Some of his videos are pretty long. You know, they go as long as an hour. But I think the ones he probably emails out to people are shorter. I would hope so. And then he can direct them to his YouTube channel to watch the longer versions. That's kind of the technique. And he does over 350 sales a year. I mean, that's just incredible. But he says he does it because he keeps in constant contact with people. And he says not enough people are sending videos or texting. So when you get off the phone with somebody, what he does, he gets on his phone, he gets in the text to his prospect or client. He says, "Hi, Ruth. Thanks for chatting with me today. Glad that everything is well. I will revisit you to confirm our appointment that we set up. Have a great day. Bye." And they see your face. Nobody else is doing this. It's communication at the new normal. Communication at the new normal level, right? And you know what happens with new normals? They become everybody's doing it. And don't wait till your competition starts doing it for you to say, I got to start doing it. You know, be the frontier. And Tom said in his talk, he says, you know, I'm going to get Tom on the show. I gave him a few dates in July. I have Aaron's coming tomorrow, and I think Samantha's going to join me as well. But anyway, the last 3 weeks of July, the Saturdays, I invited him to come on the show. He has his first video. He said, you have to watch it because you'll laugh. If you think you're afraid to do a video, look at his first one. He said, and then you go from there and you learn, you know, but nobody's going to remember that first video because you're going to keep in constant contact with people. And he says he just sets aside time every day to communicate with his database, with his sphere of influence, with the people that just bought a home a year ago, with people who have birthdays. They get that video from him. Hi, Ruthie, happy birthday. Just wanted to let you know I was thinking about you and I hope you have a wonderful day. Now, I know on Facebook and everything, you can always do all that stuff on social media, but when they get a text and a video and nobody else is doing it, you stand out. And that's what you want to do, especially in the next year and a half. We are going to have a great market for the next year and a half. That's what everybody says. I believe them. I'm praying like you are. So in the meantime, be the people that are connecting with the people. And then in the third year, right, in 2023, okay, and you're still doing it, guess what? Guess who's going to be top of mind? You are, because you're going to continue to do it. There is nothing like communication, nothing like it. And one thing that he is smooth, he is direct, and he is deliberate, okay? And those things come with practice. And like Aaron Taylor always used to say, uncomfortable becomes comfortable with practice and action. And that is so, so true. So just start doing it. The other thing that Tom does, he goes and he takes this temporarily off the market list, and he keeps track of it when and if these temporarily off the markets expire. And then he calls them, because once you can't solicit these people, they're under contract. So you cannot solicit your fellow realtors. That's unethical. But if you watch them, and there's companies out there that'll, you'll have to pay for them to do this. And we tried that once. And believe me, if you do it yourself, it's better. Just start today, print this out. It's real easy. And then, watch, then put those MLS numbers, in cut and paste and put them in there and see when they expire. And then he calls them because they've expired. Right. And so now those are people that have already signed a listing contract. Okay. So they're familiar. That's good. They had some reason they wanted to sell their home. And that may still be relevant or not. Right. And the person that was selling their home might have been a friend of theirs. And so there's some strategies around there. And I'm gonna let him dissect those things. He unpacks it very well. So if you want to do what he does, now he doesn't just do expireds, but his techniques on his team that do this, it works. It works. But the main thing that works is the communication and the video texting and the sending videos in the email. Now, your Agent Formula website can do that as well. And I'm excited because we're going to do a social media class, 2 classes, one for the business page on Google and for LinkedIn. I believe that's on the 19th from 10 to 1. And then on the 30th, we're going to do Facebook. And we're going to show you some crazy ads that are working like gangbusters on Facebook. So lots of things, lots of excitement going on in July. And we're going to continue our $59 special in Hot July. So if you want to have a website that makes you stand out above the rest as well, and there's a whole way to utilize that to get people. We have landing pages. You don't have to pay the company to create landing pages for you. We have the email campaigns with a video, so you don't have to pay BombBomb. So for $59 a month, you can save hundreds of dollars a month if just by utilizing the tools in your toolbox with Agent Formula. And we do classes on the 2nd and 4th week of the month, depending on the need. Sometimes, people get busy and they cancel. So, that happens. We understand that. But we try to do the 2nd and 4th Wednesday from 2 to 5. So you can learn how to use these tools and put them on autopilot, right? I love you all. It's time for me to run. We're having our Buffini class today. Hope to see all my Buffiniites there. And you all have a wonderful day. Tomorrow, join my show. We're going to have special guest Aaron Taylor and Samantha from HomeServe. So it'll be a great show, and make it a great day.